Hello, everyone, and welcome to the third decarb event of the series on green macroeconomics. I'm Anna Maria Goeth. I'm a PhD student at Humboldt University of Berlin.
Hey everyone, I am Gökhan İder. I'm a PhD student at the IW Berlin and the Free University of Berlin.
We're part of the Decarb Future Economy Forum, and it's our greatest pleasure that we can guide you through this event today. For those of you who don't know Decarb Future Economy Forum aims to explore pathways on how to decarbonize our economies. For those of you it brings together thought leaders from a wide range of approaches and provide them with a shared platform to discuss their ideas. Some of you might have already joined us for our last events. It's been on green or post and degrowth and the role of fiscal and financial policy in the green transition. Today's event will focus on the green monetary policy. We want to talk about how the ECB could support green investment despite high inflation, and what are the tools that the ECB aims or should use to tackle climate change.
Well, to discuss these important topics, we are very grateful to have a stellar panel of speakers. Thekla from Bülow, Michael Bauer, and Emanuele Campiglio. A big and warm welcome to the three of you. Our speakers are absolute experts in their respective fields, and we will provide a further introduction of each speaker before their statement presentations. First, to get started, Anna and I will shortly present to you what the ECB has done so far to fight climate change. And after that, we will have a discussion between the panelists, and there will be time for questions from the audience. As this is a webinar, participants are muted and without video. So if you have a question, please use the Q&A function where you can also upvote or comment on each other's questions. Please be advised that this event is being recorded and that the recording will be published. Well, now to jump into the topic of green monetary policy, Anna. What can the ECB actually do to fight climate change?
So, Isabel Schnabel, a very prominent member of the executive board of the ECB, stated recently that in line with their mandate, the ECB wants to further increase their efforts to support the fight against climate change with a long-term goal to align their policy action with the Paris Agreement. But there are two big challenges. So reaching at zero emissions requires massive investment into technical innovation and renewable energies. Lower interest rate would increase investment, but currently we also have high rate of inflation. So to lower inflation, the European Central Bank would need to increase the interest rate. Increasing the interest rate makes investment in turn very expensive again. So this also means that green investment becomes more costly, which can lead to too little green investment today to reach net zero by 2050. Central banks aim to influence inflation economic activity using the interest rate to influence lending and hence investment. This is why the current ECB decision to increase the interest rate is very important, since it determines the cost of investment today. Because if production possibilities stay as dirty as of today, we'll be stuck with a dirty fossil fuel-based production in the future as well, and we'll have no chance to limit climate change. So does the ECB actually do anything to address that problem?
Yes, definitely. Actually, the ECB decided to include climate change considerations in two of its policy instruments already. The first one is the asset purchase program, and the collateral framework is the second one. Additionally, the decision to implement green targeted refinancing operations is under discussion. But Anna, could you please elaborate on what the ECB is doing within its asset purchase program?
Sure. Well, for a long time, interest rates had been at zero and inflation was very low. So the ECB could not lower the interest rate to boost investment. Therefore, they had to think about something else to increase investment. This is where the ECB started the Asset Purchase Program, or APP, in 2014 to help the economy to recover. In the Asset Purchase Program, the ECB basically went to the capital market and bought a whole bunch of bonds from the private and the public sector. In the graph, you can see the yearly bond purchases of the ECB starting in 2014. You see a lot of blue, which are the public bonds the ECB bought, and you see the yellow parts, which are the corporate sector bond purchases the ECB did. And the ECB bought a few other bonds as well, the green and orange parts. To counter the risk of the pandemic, the ECB introduced a similar program in March 2020, which you also see in the graph. For now, we'll focus on the Corporate Sector Purchase Program, or CSPP, the yellow bar, because the ECB has already implemented a change due to climate change considerations. What is the aim of this corporate sector purchase program? Well, the ECB is buying corporate sector's bonds so that the cost of credit is lower for these companies. The ECB buys the corporate bonds in a so-called market neutral way. That means that the amount of bonds the ECB buys from one company corresponds to the company's bond market share. So what's the problem related to climate change? Well, large firms in emission-intensive sectors, such as, for example, car manufacturing, issue a larger number of bonds, while the lower emission service sector finances itself through other channels, like bank credits, for example. As a result, the ECB's bond purchase program has a carbon bias. It's now well documented in the literature that the ECB favors emission-intensive activities through this neutral corporate bond purchases. And thus it ensures that credit costs fall, but they particularly fall for emission-intensive sectors.
But Anna, if I understand this correctly, it would mean that the ECB's this program actually favored brown firms over green firms within the corporate sector purchase program. Is this true also?
Well, you're right. The way the ECB purchased corporate sector bonds was not aligned with the climate targets of the EU, but the ECB responded to that criticism. In 2021, the ECB introduced a climate action plan. So currently, when the ECB purchases corporate bonds, they favor issues with better climate scores. The goal is to remove this existing carbon bias towards emission-intensive firms. When inflation started to increase again in summer 2022, the ECB had reacted and started to first increase interest rates, and second, they stopped buying new bonds. So to make credit more expensive, hoping to lower inflation rates that way. So with high inflation rates, it is unlikely that the ECB will buy huge amounts of new corporate bonds. Thus, this policy change will have limited impact, especially if the public bonds, the blue bars, are not addressed somehow. But Gökhan, what else did the ECB actually do to tackle climate change?
Yes, on July 4th of last year, the ECB also decided to make changes in its collateral framework. Why is this important? Well, it's important because for any bank to borrow money from the ECB, they first need to pledge collateral, which are in general assets in their balance sheets. Without collateral, a bank cannot receive a financing from the ECB. This collateral can be in different forms of assets, and one of these is the corporate bonds of non-financial companies. The ECB decided to set an upper limit to the share of assets issued by entities with a high carbon footprint, such as fossil fuel companies like Shell. For example, a bank that holds many bonds of dirty companies will not receive the same amounts of financing from the ECB that it could have before. Additionally, climate changes will also be considered when reviewing the value of the asset as a collateral. This way, the ECB aims to incentivize private banks to hold corporate bonds of green rather than dirty companies. This policy shift is planned to be implemented by the end of 2024. However, the problem is that the corporate bonds constitute a small share of the pledged collateral in the euro area. These are the dark purple bars you see on the graph. While credit claims, which are the light blue bars, which are loans that banks give out to companies, make up a much larger share, but they are not yet included in this policy shift. An example for a green credit claim would be a bank providing a loan to a company that will renovate a building to make it more energy efficient. An example for a dirty credit claim could be a loan to Shell, again, to increase oil production. These loans are assets of the bank, which can be pledged as collateral to receive financing from the ECB. And the ECB's plan does not yet include to set a limit for such dirty credit claims, which would have a much larger impact. This is especially important now, because the collateral framework is the main policy tool the ECB can use to address climate change when the ECB is also fighting against high inflation.
Okay, that's interesting. But you also mentioned a third policy called green targeted lending. What's the ECB actually doing with respect to that?
Well, first of all, what green targeted lending means that ECB would provide cheaper financing for green investments relative to other projects. But currently, there are only policy discussions within the ECB to set up a framework for financing green investments with a lower interest rate. However, it's important to note that the ECB has not yet committed to such a policy. Interestingly, though, the Bank of Japan and the People's Bank of China have implemented a similar program in the last 2 years. For example, the Bank of Japan provides zero interest financing to lenders supporting action to address climate change. Also, I think it's important to note, although such a policy is under discussion at the ECB, it is viewed more suitable for times of expansionary monetary policy, which would require the inflation rate to be, of course, much lower than today's.
Okay, so how far did the ECB actually get with its plan, and what should the ECB still do to align its policies with the Paris Agreement, and what might be the limits? So we want to discuss these questions with our distinguished speakers. So now, without any further ado, I'd like to introduce our first panelist, Emanuele Campiglio. He holds a PhD in economics and is currently an associate professor at the University of Bologna. Further, he is affiliated to renowned institutes like the European Institute on Economics and the Environment and the London School of Economics, the Grantham Research Institute. He has done research on topics like green innovation and financing constraints. And with his co-authors, he was actually one of the first to point out the carbon bias of the asset purchase program of the ECB. So Emanuele, we are very grateful to have you here. The floor is yours.
Thank you. Can you hear me? Yes. Right. So thank you so much for inviting me, and thank you for this amazing introduction. It's one of the best I've ever seen. So let me share with you some of my current thinking that has been evolving in time, and I want to share briefly where I'm at on this topic. So instead of focusing directly on what central banks could or could not do when it comes to climate change, I would like to start indirectly by focusing on the societal functions that need to be performed at the societal level, at the collective level, and then discuss how central banks can contribute to those. And the two key societal functions, the two tasks that I would like to discuss are first, the expansion of knowledge, and second, the management of expectations. So expansion of knowledge is pretty straightforward. Our understanding on climate change, its socioeconomic implications, the socioeconomic implications of the low carbon transition, our understanding on this is still limited. We need to expand it. And in order to do so, we need two main things. We need analytical understanding and data. Analytical understanding, I mainly mean modeling, mostly quantitative modeling, not only quantitative, but mostly. And in this regard, of course, central banks can be of great help. Their research departments are full of well-trained macroeconomists and financial economists. You know, a usual concern of academic departments is not to be able to hire macroeconomists because of the competition of central banks. And this brain power should be directed towards climate-related research questions. And to be honest, this is something that many central banks, especially some central banks, are already doing. So if you look at the ECB working paper series, for instance, it's honestly hard to keep up with their production on the topic. And the second point is data, right? So data is a very well-known problem, data availability. Usually, however, people refer to corporate data, financial data, loans, supply chain data, everything that allows us to have a better sense of the exposure of companies and investors to climate-related financial risks. Let me point out another type of data that we're missing, which is data on expectations. So expectations here are key in this dimension. As central banks very well know already, expectations, for instance, on future inflation contribute to defining the appropriate policy, the monetary policy response of a central bank. And the same consideration can be done about transition-related expectations, for instance, expectations of future carbon prices and climate policies that might affect investment decisions and then affect the actual transition. The difference is that we have plenty of data on inflation expectations, and we don't have the same for transition-related or climate-related expectations. We have more on climate than on transition. And we don't know what people are expecting in their consumer role, entrepreneurs, financial investors. We don't know what they're expecting, how these expectations are distributed, how they evolve in time, what drives the evolution of these expectations. So we need to expand it. And there is a line of work that tries to do that indirectly, to capture these expectations, looking at asset prices. For instance, Michael is also working on these topics, and many central bankers are also looking in that direction. This is excellent. We need even more than that. And in particular, I'm thinking about three main things that I'm thinking about: surveys, so asking individuals their expectations. I'm thinking about experiments. So there's already, experiments looking at inflation expectations, how they might align in time or disalign, and how they might react to shocks. We need something similar when it comes to transition expectations. And a third way to capture these expectations or beliefs or sentiments is through the study of communication. With some colleagues who are working heavily on central bank speeches, but essentially any body of text works to have some insights, right? So tweets and social media posts, media articles, Google queries, et cetera, et cetera. So we need to expand our understanding of our knowledge, I would say, even before understanding of what expectations about climate and the transition are. And central banks can help with that because they have been working on expectations for many, many years with mixed success, but mostly with success, I would say. So they can be of great help on this. Which brings me to my second point, which is the management of expectations. So the idea is that we would need to align all these expectations towards a rapid and smooth, orderly, low carbon transition, because it's exactly in the mismanagement, in the misalignment of these expectations that might lie the seed of a possible disruption, of a crisis, of risks, of transition risks. How do we manage these expectations? Well, ideally, what should happen is a policymaker, a credible and time-consistent policymaker, setting a clear schedule of carbon prices for the future. The common wisdom is that this should be an increasing schedule. But the idea is that if firms are certain enough that these prices will actually take place, the policymaker will go through with them, then they will internalize these prices in their investment decisions today. And of course, if I expect a high and increasing carbon price for the future, I might be more inclined to invest in low carbon technologies than otherwise, than if there is no carbon price or if there is very strong uncertainty. Because that's the problem, right? We don't have a time-consistent, committed, credible policymaker. We have experienced several cases of policy reversals in recent years. Think about the US with Paris Agreement, Gilets jaunes, Australia and the carbon tax, et cetera, et cetera. So there is a lot of uncertainty on what might happen in the future, and this creates heterogeneity of these expectations, which might then have an effect on investment decisions. Is the central bank role to manage these expectations? Well, to some extent, they are already trying to do that. If you look at the explosion of all this climate-related public communication by central banks, one of the main purposes is exactly to try to align the financial sector towards a low carbon transition, a rapid one, which is great, fine. But of course, the transition doesn't happen because central bankers talk about it, right? The transition happens because we have policies going in that direction, or we have technological advancements and breakthroughs. So the risk here is that the central banks might be pushing for something that is not under their control, and this could have, of course, credibility and legitimacy impacts for them in the future if policymakers actually don't go through. So what I think we should be discussing is what is the appropriate institutional framework that would allow us to combine effective climate action together with institutional legitimacy. And there's a few avenues that we can explore and discuss, but I see that my time is over, so I will postpone this to the Q&A section if relevant. Thank you.
Okay, thanks so much, Emanuele. Then just a short question. So could you maybe, like you said, like management of expectation or transitional expectations on how the transition is going to be carried out is important. So what would happen if it's like, maybe you could give an example, what would happen if the expectations are not managed well? So what's like a worst case scenario that you could think of, maybe in 1 or 2 sentences?
Well, the worst case scenario is that a failure of credibility of the policymaker might lead to a failure of the transition. Yeah. So if we have not credible policymakers that announce things that they don't actually go through with, then this might lead to at least a proportion of firms deciding not to believe to that, to the announcements, and invest high carbon instead of low carbon as desired by the policymaker. High carbon society is one in which transition risks are higher because of the implications of decarbonizing in a high carbon economy, which then might lead the policymaker to be less inclined to actually go through with the policy, right? Because of social discontent. Again, gilets jaunes. And this would then lead them to not fix a carbon price as promised, the one that would be needed, which would further affect its credibility into a vicious circle that would then lead to a failure of the transition. That's the worst case scenario.
Okay, thank you very much.
Well, now we move on to our second speaker, Michael Bauer. He is currently a professor of economics at University of Hamburg, on leave from the Federal Reserve Bank of San Francisco. He's a well-known academic and an expert in the field of monetary policy and macrofinance. And for the monetary policy nerds like me, Michael has excellent papers on the interaction of financial markets and monetary policy that, in my opinion, every PhD student in the field must read. And recently, his research also focuses on climate finance. We are very glad that he could join our webinar today. The floor is yours, Michael.
Thank you so much. Really nice introduction. Really glad to be here. Okay, so let me jump right in. So the ECB needs to help green financial markets. It needs to support the transition to a low carbon European economy. Basically, it doesn't have a choice for two reasons. One, its footprint in financial markets is enormous, right? It is, well, let me leave it at that. It's obvious, right? It's such an important player. And second, it is legally committed in the form of its secondary mandate to, I paraphrase, support the EU's general economic policies, including environmental objectives, wherever this is possible, without prejudice to price stability. So as long as it doesn't interfere with the primary mandate, it must support the economic policies of the EU. So it just must not stand in the way. In fact, it must actively support the green transition. It's part of its mandate. So just to set the stage, but which tools should it use? And we want to ask ourselves about the costs and benefits of these tools that you mentioned. And without going into much details about any of these tools, I just want to tell you about my own thinking, some conceptual framework that might help if you want to evaluate the costs. So I'm thinking of three criteria basically that you can use to think about whether the costs, to think about the costs of certain measures for greening the monetary policy framework. It's the same criteria that I would use to evaluate any unconventional monetary policy. And let me illustrate these three criteria with the example of the targeted long-term refinancing operations with a dual interest rate strategy. So give banks lower interest rate if they have a portfolio that includes a lot of green lending. Right. So the three criteria are the mandate, central bank independence, and side effects. Okay. So the first mandate. So obviously this is the place to start thinking about new policies. So price stability is a primary mandate, the main goal of monetary policy. Nothing must get in the way of that primary mandate. Now, is any new proposed policy consistent with this mandate, the primary mandate? Does it get potentially in the way of accomplishing price stability? Does it risk getting in the way? And then also, does the policy follow from the ECB's secondary mandate? So with the green targeted long-term refinancing operations, the questions you need to ask yourself, we all need to ask ourselves, is there a possible risk that this might impede the monetary transmission? If you give a bunch of banks a lower interest rate, significant spread below the rate of other banks under certain conditions, does that somehow bias the transmission of monetary policy to the financial sector? Okay, so I want to mention, by the way, that the last targeted long-term refinance operation happened in December 21. So this is only going to become relevant again in the next, easing cycle potentially. They're running the TLTROs off the books right now with voluntary repayments, etc. But we can talk about a dual rate strategy for the future, and it's certainly something to consider. The other one is central bank independence, my second criterion. So monetary policy needs to be insulated from short-term political pressures, right? We learned that in the macro textbooks. But central banks cannot take the independence as a given. They have to earn it. Basically, that's what Powell said, or roughly said at a conference a few weeks ago. I think it was at the Riksbank, I forget. But he said, and here I'm quoting him, taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. So it's closely related to what's the mandate, but I think it's worth emphasizing as a separate thing to think about. Does a certain policy risk endangering independence because it's overreach, because it's a too expansive interpretation of the mandate, or it clearly oversteps the mandate? That's a real risk. So with green TLTROs, it's hard to say. Question we want to ask ourselves there is, does this risk that the ECB gets into the realm of credit policy, favoring certain industries and companies based on environmental scores, is that going too far? I'm not saying it necessarily is going too far, but I think that's the question we want to ask ourselves. In practice, that's going to involve some pretty hard choices about how to evaluate the lending portfolio of a bank, how to decide whether it's going to get that discount on the interest rate. So that's just going to be some controversial, difficult decisions, and it's going to be some political aspects and political discussions that might give rise to. So I think this is important to keep the independence in mind. And also relatedly, is maybe a certain proposed measure proposed because of short-term political considerations, right? Is it the result of interference from politicians? That's another thing to ask in this context of central bank independence. Lastly, side effects. So what are possible adverse side effects of a certain policy? Distributional effects, effects on competition, effects on financial stability. So those are obviously really important, difficult things to think about. And it's really top of mind for the ECB because in May 2020, the German Institutional Court said, it was basically criticizing the ECB that it wasn't explaining how it evaluates side effects. And then Isabel Schnabel gave a speech where she was arguing that the ECB's policies, asset purchase policies in particular, were not only necessary and suitable to accomplish the goals, but they were also proportionate. And she explicitly discussed side effects. So side effects, for green TLTROs, hopefully they would have beneficial side effects, bringing more competition into green industries and green lending. But there's a risk, that they could really change the market structure in the banking sector. All of a sudden, certain banks that have more brown lending on their portfolio could be maybe driven out of business because they don't get that premium rate, that they don't get the better rate. So what would this do to market structure in the banking sector? So anyway, so those are some of the big questions. That's kind of the framework that I have in mind when I think about new proposed policies, unconventional monetary policies more generally, and also specifically for measures in order to green monetary policy. Thank you.
Thank you, Michael. I mean, it's really important, especially to get your insight on these topics. But I just want to ask a short question to clarify one thing. So, for example, these green targeted refinancing operations, also by the ECB, Isabel Schnabel said it a couple of weeks ago, I think, that they can be applicable policies for during expansion and monetary policy cycles, as you said, the easing cycles. Is that the problem there is, I assume, the price stability mandates? Could you elaborate on that a little bit, if that's possible?
Sure, yeah. I mean, right now, it's not really an option to, I mean, there's still TLTROs that are running right now, and they have been changing the rate on those, making them less attractive so that banks will actually start to pay them back. Of course, right now they could say, hold on, we're going to give this better rate to those banks that lend a lot of green loans. So then doing that right now would then potentially stop the prepayment of these loans by the banks. They get the better rate, and they would earn a premium, and they would extend more loans maybe that then would be desirable from the perspective of the restrictive stance of monetary policy that is necessary right now. But also on the downside, like let's say we want to stimulate the economy, we make new green TLTROs while we're having a really expansive stance of monetary policy, but then we're charging all these banks a premium that have too much brown loans in their portfolios. And, it's hard. I mean, we would need a lot of research to understand how many banks, how that affects the transition, how that would potentially provide less stimulus, how much less stimulus that would provide in order to calibrate really the stance of monetary policy appropriately.
I see. So the monetary policy transmission itself might actually change. So it's really difficult and also important to, of course, quantify this. But for now, we are moving on to our third speaker, Thekla from Bülow. She co-leads the Central European Consulting Team at Aurora Energy Research, which is an energy market modeling and consulting firm. She advised investors, renewable energy developers, financial and industrial companies on all aspects of the European electricity markets, with the focus on green decarbonization. She is an economist by training, with degrees from University of Münster and Humboldt University Berlin. She's passionate about climate change action and the broader agenda of sustainability, and is committed to supporting both the public and the private sector to enable a fast and viable road to a low-carbon world. And it is often difficult for us as PhD students to know which policies the private sector really needs when we're doing research. And therefore, we are very happy that Thekla can join us today with her first-hand experience on such issues. The floor is yours, Thekla.
Thank you very much, and thank you for having me. The internet dropped out a minute ago, just at the right time, but I'm back, and hopefully it will stay stable. So exactly, I'm keen today to speak about a little bit from the industry side, since I'm supporting large corporates, but also renewable developers in making these investment decisions for the green transitions. The reality is that we are on a path towards decarbonization across the different European countries. And an actual real big movement has happened both on the capital market, but also on the decisions of individual companies. The big challenge, obviously, is to enable investments to go into the right direction. So on the one hand, investment into new green technologies, being, for instance, the expansion of renewable power generation. But on the other hand, there is a whole task for companies to actually transform their way of doing business from the really operational parts, but also in how capital is allocated and going into the right direction. The reality, in order for an investment to happen, the business case needs to be the right one, and the financing of an investment is quite key to achieve an investment decision. When we talk about, for instance, investments into renewables, this often happens by smaller companies, developers, that require lending from banks, and the banks obviously are looking into the risks that are entailed in those projects. The interest rates have gone up quite substantially in the last couple of months, and this is significantly impacting the cost of capital for a lot of these investments. And we are indeed seeing a slowdown of these investments into the areas that are, frankly, obviously needed. There are a lot of other issues besides higher interest rates, such as disruptions in value chain on a global scale, as well as ramping up of tariffs, more national approaches, and so on and so forth. That is slowing down the processes. But the higher interest rates are definitely causing an issue. And the reason why this is a particular issue for the new technologies is the risk perception around these investments, meaning that in a lot of these new technologies, there is much higher risk involved than for technologies that are much more mature in many ways. So there's technology risk involved, as well as go-to-market scaling risk, and so on and so forth. So in effect, in order for a business case to fly, there needs to be a lot of certainty for banks also to participate in the investment, and for the companies to actually go for an investment decision. So the main question is, from my perspective, not only around the interest rates, but also about de-risking the project. So how can we ensure that some of the risks that are leading to a reticency in providing capital are taken away? And there's obviously a lot of possible ways of tackling that. On the one hand is ensuring a secure revenue flow for some of these investments by providing subsidies and for instance, in the renewable sector, around contracts for differences, which allow a stable revenue. But on the other hand, also around, for instance, providing some insurances as a backup for companies and projects that don't have maybe the financial capabilities to really have no risk of default. So insurance is a big part. We, for instance, see it for companies that are trying to close direct green power contracts and that don't have a good credit rating. For these kind of companies in some countries, such as, for instance, the Nordics and in Iberia, there is some instruments by the governments to provide these insurances. And this is, and then in turn, giving banks a lot more confidence in their financing decisions and reducing the cost of capital for these projects. Beside that, there's obviously a lot that the public sector, in addition, can do, and the ECB, in my perspective, obviously needs to work hand in hand with a lot of these institutions in order to fully be aligned. And I'm talking about topics such as adapting the policy and the regulatory frameworks in order to enable these new technologies to get to market and to help companies actually make the move, such as, for instance, tax benefits, but also a clarity on reporting, standardization on reporting, have complete clarity on what is a good green investment versus what is not. There is a lot around international coordination and cooperation in order to really also work internationally on making use of scale effects and reducing trade barriers, which I'm personally quite concerned about. And then obviously other topics such as carbon taxes, carbon border adjustment mechanisms that are currently under discussion. So in my perspective, there's a lot to be done on the role of the ECB We have seen that the ECB has already evolved quite a bit and moved away from his historic task of just being the monetary regulator, but playing much more active role in actually helping economies getting on a decarbonization track. The other big point I would like to discuss today in the discussion round afterwards is around making sure that the policies actually reach the right people in the market, or the right companies in the market. A lot of programs, including the ones of the ECB with the asset purchase program, is focused on the really large companies, but if you, or listed companies in the end. But if you look at who really needs to make all these investments and to adjust their operations, we are, if we talk about Germany, for instance, really focusing on a massive amount of kind of Mittelstand, so small and medium sized companies that need to put a lot of capital in their hands. These oftentimes are companies that don't have a great credit rating, and usually don't have the required capital and experience to make those investments. So I think there needs to be a focus to develop instruments specifically for these type of companies, so that they can also act upon and go in the same direction as those really large companies. Those are my main thoughts. I hope I didn't go over time.
No, it was perfect timing. Thekla, thanks a lot. It's very informative, honestly, for us, and I'm sure also for the audience. I just have a quick question to clarify something in my mind. You talked about the risk perception of these such green investments and the potential of de-risking, maybe the public sector taking more of a role there. But is it also possible that the structure of financing can be adapted to it in terms of the duration of the loan, or the, for example, rollover structure of the loan?
Yeah, absolutely. So there's there can be a big role actually in the public sector to also enable more private capital to go into this whole space, right? There's a lot of technologies that go through this classic valley of death, where at the start they do get a lot of loans from the public sector, but really in the space where they need to be scaled and go to market, there is this financial valley of death where investors and equity is not going into that space because it's still too risky, while at the same time these very early stage loans do not apply anymore. And there can be mechanisms that can work quite well. I've worked a lot on topics around blended finance, which are structures that worked actually quite well in the space of development of finance, where you use sort of a first loss structure to attract private capital. So the returns go to the privates first, and then the second step to the public. And with that, you're enabled to de-risk the private capital and make it more attractive. If you have a structure, for instance, in a fund where both public and private money goes into one pot of money, you have the possibility to invest in different kind of projects out of one money pot. And with that, you have a risk mitigation between the different projects that you invest in. And then some projects yield the return that you're looking for, and some others might not. But by bundling and pooling the risk, you have a lot of possibility of leveraging a small project and make it into a big one, and aligning incentives. Yeah.
All right. Well, thank you so much for these great presentations to the three of you, and the insights you provided to us. And now we would be actually like, we would like to encourage the audience to pose questions now to our speakers as well in the Q&A. So please use the Q&A function. But before taking questions from the audience, we actually would like to dive into the topic even further with some more questions from our side. So I have a question to you, Emanuele. So we talked about the risks of, like, we have now the environment of inflation and like the challenge to get green investment going. So what if the ECB would actually fail to stop high inflation? Could that even jeopardize the green transition more fundamentally? Or what's your stance on that?
Well, It's really hard to say. Yeah, I don't have a clear answer to this. Also, I don't have a clear perspective on whether the ECB can fully stop inflation from growing. Yeah, so I think my internet connection is a bit wobbly. So if you're asking what the ECB, what happens if the ECB is unable to fight inflation, that I guess depends on what kind of inflation we're talking about. A so-called fossilflation, as Schnabel puts it, that is one driven by the increase in fossil fuel prices due to whatever reason, can actually be beneficial. But this is, environmental economic theory at the almost basic level, in the sense that when you have a scarce resource or a pricey one, then if markets are efficient, environmental economic theory would tell you that this triggers a number of mechanisms that allow for substitution, right? So we substitute away from fossil fuels towards less fossil intensive technologies. We expand the supply for fossil fuels. European countries have been going around, especially the Middle East now, trying to expand their access to supply that is not Russian. And we also have technological development. And this is something that, if you want to call fossilflation what happened during the oil crisis in the 70s, then that's it. And that also, there is clear evidence that this led to an improvement in environmental standards and efficiency. So it really depends, right? So if it's fossilflation, that it might be beneficial. If it's other forms of inflation, and especially the so-called greenflation, that might be more detrimental.
Can I just jump in on that? I totally agree with those, relative price changes. Those would have big effects. If we're just talking about aggregate inflation, if the ECB does not get inflation under control, even this current environment of high inflation is really detrimental to investment. So it's also really detrimental to green investment. And this is a point that Isabel Schnabel made in her most recent speech, right? She was saying basically high inflation creates uncertainty, and it creates some tax problems, and it can lower productivity growth. We saw that, in the early 80s, the great inflation. And so high inflation is just really, really bad. So in a way, the central bank, by following very strictly its primary mandate, the ECB, getting price stability back, will support in the medium term also the green transition, because this is a precondition for strong investment growth and strong economic growth, which is required for decarbonizing our economies. So Emanuele and Thekla, I can see you, but I cannot see our organizers anymore.
Yeah, me neither. I thought it was my internet connection, but maybe it wasn't.
And maybe it was theirs. Yes, they seem to have dropped out. But I'm sure they will be back in a minute.
We could also take one of the questions in the Q&A while we're at it,
Yeah.
I guess maybe to follow up, someone was saying, it's unrealistic to assume that aggregate GDP growth can continue in a decarbonized economy, and that basically the ECB should help ensure that the financial system can remain viable in conditions of zero or negative GDP growth. And that's basically and it should not pick winners. It should just ensure financial stability. So I do agree that financial stability is absolutely crucial, together with price stability. If we don't have a functioning financial system, then we can't fund the green transition, right? But I do want to question that I mean, that's a hypothesis that we cannot have growth in a low carbon economy. So I think there's a lot of people that think that we can have green growth and that we can achieve a transition to a low carbon economy that still grows. But I'd be really curious to hear what you guys think.
Well, I don't want to get too much into the debate between green growth and degrowth and the possibility of having green growth. I do agree that we need to be prepared to low growth or zero growth scenarios, even if we don't like them. You know, a zero growth society could take place at some point, whether we want it or not. And central banks, of course, need to be ready for that. I honestly don't see it as an immediate pressing issue for them, but of course I might be wrong.
Yeah, so from my perspective, I think where definitely there is a challenge is that there is a massive amount of capital that needs to go into and flow into the economies to be able to decarbonize, and that alone somehow needs to be offset by a potential for additional revenues within the economy that helps to boost the economy. To be honest, I do see a lot of opportunities also in low carbon technologies and kind of the combination with digital solutions. So I wouldn't say that kind of a green economy is going to make the growth slower. And the key aspect that needs to be considered in all of this of the investment story is what happens if we're not doing anything and not guiding the capital into the right direction today, and not achieving the targets for the Paris Agreement. Then we will get into a world where there will be massive costs in climate adaptation. So really weather extremes that will cost a massive amount of money. We are already seeing the repercussions of climate change hitting different economies, and this will further increase. And if you price in those costs into the investment decision and the economic prospect, you will get a very different picture. The issue is that obviously we are doing individual investment decisions right now, and in a lot of these investment decisions, the long-term repercussions on every individual project is not taken into account. And this is why still oftentimes the capital is still flowing in the wrong direction. So I think it's really important to look at the full picture of what costs economies will have to bear if the capital is going into the wrong direction.
Well, I mean,
shall we move on to the next?
Yeah, I mean, so we do have the questions that they're thinking about. So maybe the asset purchase program is a big issue, right? I mean, the question that we can ask ourselves is whether the ECB went far enough or whether it went too far. What else it should do in order to green asset purchases? And so I guess for Thekla, the question will be: is these asset corporate bond purchases, is that going to make a big difference? Because you were saying that it's more small and medium companies that are really important for this transition, and they maybe don't finance themselves like that. So maybe you can get into that a little bit before we circle back to Emanuele and me.
Yeah, that's exactly the point about what I would find a bit concerning about the asset purchase program is that it is obviously focused on really large listed companies, which obviously are companies that do need a lot of support, really big chemical companies, mining metal companies that will need support. But this is not targeting the many companies within the small and medium sized sector that need access to capital. And here there is other measures that could apply, both from a European level, but also from a national level. I mentioned instruments around providing default and counterparty insurance, but also providing the possibility of pooling the request of some of these medium-sized companies into different money pots and funds could really help this part of the economy. So in my perspective, there needs to be a little bit of thought around how to really address the issues of the different parts of the industry rather than just the big ones.
Thekla, can I follow up with a question from the Q&A that seems really closely related to what you were talking about? The question specifically to you is, do you deem risk averseness and inertia in German small, medium enterprises or access to financing a bigger barrier to the transformation of the Mittelstand? Which sectors are especially willing to transform but lack access to finance? Yeah, so it's a combination of both, basically. So the higher interest rates, the higher cost of products for the moment, such as steel, the lack of available employees, value chain disruptions, and so on, is what is creating the biggest issues for the Mittelstand today. And I'm seeing some of the companies that started focusing on really trying to find a decarbonization pathway focus on these very imminent issues. How do I hedge my power supply so that the power prices remain manageable? How do I get to my raw materials and products so that I can continue producing my products, rather than focusing on the longer term task of decarbonizing? So it's been definitely quite a big hit in the last year. The ones that have started thinking about it are the sort of on the one hand what I would call green image seekers, so companies that have a lot of visibility with end consumers, and where there's a lot of stakeholder pressures from their own employees and from their clients to make green efforts. Those are definitely the ones moving fast. But also kind of the more energy intense companies that are really seeing the gas, the coal prices, the oil prices going up. They have an aligned incentive of actually looking into renewables, which are much cheaper, and to slowly also move away from how they were doing their operations beforehand. So these price hedgers, as I would call them, are also quite active currently in figuring out new ways of doing business. So unless you have something about that, Emanuele, that people are asking about the asset purchase program, and we kind of started talking about it a little bit. So maybe maybe let me hit it off with the the question: did the ECB go far enough? How else should the ECB improve the asset purchase program to align the instrument more with the Paris Agreement? I mean, so far the ECB has gone quite far. I mean, there is a decision that not only are they going to tilt their reinvestments, and they have been doing this, towards their reinvestment of corporate bonds towards companies with low emissions, and they have this elaborate scoring system that you can find on the ECB's website. It's pretty interesting. I think a lot of thought goes into that, and they would also reshuffle their stock of corporate bond holdings and to shift towards green issuers, right? And they're also considering greening its sovereign bond portfolio. And that, of course, is the big one, because that portfolio is 80% of the asset purchase portfolio. The corporate bond portfolio is only 10%. So that's I think 2.7 trillion or something like that is in sovereign bonds. And I mean, that is just they're going to try to do more even on that portfolio. So I mean, they're really proactive on that front. And I would just say that you know, I think that will have an effect, you know, on the margin. It's really hard to know how much. I think on the corporate bond side, that, you know, that's really going to help green issuers necessarily. But it's a quantitative question. On the sovereign bonds, I guess I'm a little bit more skeptical there about how much that is going to do, because it's just really much harder to green that portfolio. I mean, first, there's just the capital key that they have to somehow abide by. So that prescribes how much they can invest into each country. And then also, you know, they have these considerations about spreads in the periphery of Europe. So they kind of want to buy more Italian bonds to avoid, you know, market psychology driving up spreads in Italy. So those issues are really top of mind when they're deciding on the countries for the sovereign bonds, and they could basically just buy green bonds of these countries instead of conventional bonds, which, you know, would be great. That would help this market. That would you know, increase the green bond premium, potentially channel more funds into green projects. But there's just not a lot of ability to really make big shifts in the sovereign bond portfolio. So there, I think, you know, there's a lot more questions about how big the effects are going to be. Our moderators are back.
Welcome back.
Sorry, this is why we need to think green transition and internet transition together. Sorry.
That's right. We need more investments. More investments into green and digital technology.
Okay, yeah.
Yeah, but about the asset purchase program, yeah, I agree in general with what you're saying, Michael. I also have the feeling that the impact, especially on the corporate sector purchase, might be limited, despite them moving from a flow to a stock perspective, as you mentioned. Also because, you know, everything is kind of winding down, and it's unclear to what extent this could have an effect. When it comes to the public, the sovereign bonds purchases, yes, there are difficulties. I don't know exactly what to expect. Green bonds from sovereigns are relatively limited for now, so they might not be enough to really make a difference. What I would like to see is the purchase of supranationals making a difference. You know, part of the public sector purchase also includes these bonds from supranational institutions like the European Investment Bank, say, and other development banks. That could, I think, make a lot of difference, because these are public banking institutions that are really financing things that need to be financed, especially in the public sector itself, local authorities and so on. The problem there is more on the supply side, like on the development banks side, rather than the ECB itself, in the sense that they are definitely limited in what they can raise anyway, right? So even if the ECB buys their bonds, you can think of corporates being affected, and financing conditions, you know, better financing conditions affecting the issuance of new bonds. Well, this is a bit more difficult when it comes to the European Investment Bank or similar development banks, because of the way they act, their statute, right? So their financing department usually decides, okay, let's raise this much money, and then they invest the proceedings in low carbon activities or socially relevant activities. So yeah, so ultimately my point remains, that is, I don't expect this to make a big difference. I would like that supranational dimension, however, to have an impact.
Okay, well, thanks for elaborating on that, and sorry for the little technical hiccup. But we actually have like another question to you, because we actually ran into very interesting data that we would really like to share with you concerning the whole story on green investment. We found this very interesting figure, and we can see that investment into renewables, especially wind, has actually boomed not in Europe, but in China and more in the US in recent years. So in the EU, actually, this investment has contracted sharply. So Thekla, to you, or wind energy, as you can see, it's like the wind bar, it's already started to contract a lot in 2017. What are the main reasons that you see that this investment actually contracted so much? And is there anything the ECB could actually do to reverse this trend? Because you've been talking also on different financial instruments and everything. So is there actually anything that the ECB could really address with their policy?
Yeah, I think that there's a lot of components that go into why the graph looks this way, and especially why the graph looks very different in the US and in China. The main reasons for a slowdown or a bit of a slowdown on the EU side is more kind of on the project development aspect. So there's massive delays on very local basis around permitting of renewables. In some countries, there's a massive issue around the expansion of grids, so the power grids, which is slowing down the development of renewables, and so on and so forth. So this is the main reason. It's less about interest rates that are an issue. Projects just take an enormous amount of time. Now with the Repower EU program, some of the renewable investments focus has been accelerated. But if you compare it with the amount of capital, public capital that has been unlocked both in China and the US, this is the main reason why it's driving it. They also have very low or much lower policy hurdles, environmental hurdles, and so on to push these projects forward. So they have gone in with a whole different scale into how these investments are being pushed through, the permitting process are being pushed through, etc. Another big game changer in the last year was the IRA in the US, so the Inflation Reduction Act, which is basically a massive fiscal capital boost for the development of new technologies, including renewables, but also topics like green hydrogen, where a massive amount of capital is needed. And what is a bit the concerning part is that the European Union is trying to do a lot of things right in terms of setting the right qualities, the right standards, but it's taking an enormous amount of time to set these criteria and standards and so on. It's been taking years. Again, taking the example of green hydrogen, for instance, we have been waiting for over a year now on what the EU considers as green hydrogen being green hydrogen. So especially around the quality of the green power that is required for green hydrogen. And at the same time, the US starts off with the IRA. And we see all the investments going into the US. Some of the companies, the big utilities, only have so much resources to put on that topic. And so the shift is moving away from Europe and to the US. So this is also a major concern. The EU is trying to do things right, but at the same time, the rest of the world has lower standards, making it much easier for investments to go into those areas. And so we're falling apart, or not falling apart, but falling back. So this is a risk to be considered in those kind of investments, and your graph is one indicator for it. Yeah.
Thank you.
Yeah, thanks a lot. I mean, these are things that we really wanted to know about, and Thekla, and thank you for really bringing out the information to us. And we have a last question from our side to all of you. Is as a central bank in general, the potential ability of the ECB seems limited to me a little bit to aid in climate goals And like, how can this be improved? For example, one thing that I can think of is cooperation, better cooperation with fiscal policy, of course, or should the ECB be more ambitious in its policy making? Or, for example, Emanuele touched into nice, I think, also line of research with communication strategies of the central banks. If there is anything that you would like to add on this topic, I would be really curious to hear about it.
Yeah, with pleasure. I mean, to some extent, there are two different questions. The central bank communication work that I was mentioning before is still ongoing, but it's basically what we did was to develop this data set of central bank speeches, which is very large, the largest that we're aware of. So the usual source is this BIS data set that is very large, and we have roughly double that size of speeches, and we're starting to analyze it. And of course, climate, well, not of course, but climate is our first preoccupation. And the results that we have at the moment is that the way central banks started and then evolved their communication on the topic changed. So we're running this structural topic modeling analysis and then trying to look for drivers. And the preliminary results, because as I said, it's ongoing, is that there was a first wave of communication more on the, let's say, sustainable and developmental finance side, mainly driven by Southeast Asian central banks before 2015, so from 2007 onwards. And these were mainly focused on supporting development, sustainable development, etc. This share of the topic then decreased starting in 2016, 2017 to be replaced by two other topics. One is climate-related financial risks, unsurprisingly. And the other one is more targeting green finance, but in a sense of market opportunities and business opportunities rather than support to sustainable development and sustainable finance. And what we find from our econometric analysis is that what seems to drive most of these results is not really, so we're looking, like exposure to climate-related risks, exposure to transition risks. We don't find much. What we find is a positive and significant effect of institutional dimensions. So for instance, the degree of central bank involvement in financial supervision is clearly associated with an expansion of central bank communication on the topic. But sorry, I kind of diverged. But your first question was about what central banks. Sorry, can you repeat me the first question?
It's about like how can ECB actually increase its potential ability?
Oh yes, perfect. Thank you. So I'll be very brief on this. I can come back to it on what could be discussed. My personal feeling is that the ECB is probably the most prominent example of what central banks can do about climate change, and they are roughly there. They're very strong in their commitment to the issue. That is clear. They communicate on this. They discuss policies. They do research. They share data. So I think that we're basically at the envelope, like pushing the envelope of what is allowable, what can be conceivable under the current institutional framework. So People's Bank of China and Bank of Japan, someone was mentioning them in the chat. Of course, they do things differently, but they're not the ECB, right? And they're not the Eurozone. So what is allowable there is defined by the institutional framework there. So the question is rather, should we discuss a change in the institutional framework? Because again, personal opinion, the ECB is basically, there's not much else that you can think they could be doing in the current setting.
If I may chime in there, those are some great points that Emanuele made, and I totally agree with. I mean, the ability of the ECB to aid in climate and climate goals, climate change mitigation seems limited. I think that is by the nature of the ECB being a central bank. I mean, it's important to keep in mind that that this is a long-term structural change, right? And the central bank is focused on short-term macroeconomic stabilization, right? Monetary policy is about the short term, really. So for climate change, I mean, for the green transition, we need long-term, predictable, gradual, transparent changes in incentives, and we want to foster green investment. And so monetary policy is really busy responding to macroeconomic conditions over the business cycle, right? Changes interest rates often very substantially, like we're seeing it right now, in order to stabilize the economy. And these are just two really different things. And it's really, I mean, maybe sometimes they can be reconciled. Like you can, maybe favor green bonds and still accomplish your stabilization goals, and at the same time, have a long-term impact on the green transition. But overall, this is really challenging to bring these two into alignment. I think Schnabel once said, monetary policy is a demand-side policy that varies with the business cycle. It cannot provide structural support to the green transition. I mean, certainly not alone. So just to say, monetary policy is a blunt tool, a short-term tool. People have said this about, so that's why it's limited in helping the green transition. And I want to draw this analogy with financial stability, right? Bernanke has often said, leaning against the wind with, financial risks, financial stability risks, is with monetary policy is problematic. Monetary policy is a blunt tool, and we have macroprudential, microprudential, bank supervision policies to deal with the financial stability side. So we have fiscal policy and financial policy and government policies, green policies to aid with the green transition. And so everyone has kind of their primary responsibility. And for monetary policy and central banks, it is not their primary responsibility to help the green transition. So I'm not, so that's why I totally want to second Emanuele's point. The ECB has really pushed the boundary. Some people say too far. I don't know. I'm not the one to judge. I personally think they must not stand in the way of the green transition, as I said in the beginning, but they certainly shouldn't be overburdened with this, monumental task, which really fiscal policy, governments, and other economic policies need to mainly accomplish.
Okay, thanks a lot. So there is a question in the Q&A that might relate to that. So how to make sure that independent bodies such as the central banks coordinate well with governmental policies when it comes to climate change? So since there's a lack of democratic decision-making within the central banks, for example. I would address it, to you again, Michael, or Emanuele.
Yeah, I was looking at that question, and I guess it's a little bit abstract, so it's a little bit difficult to see what exact coordination problem we're talking about. In general, I don't think that they would clash. Like if we have green subsidies and we have tax incentives and we have other incentives for green investments on the fiscal policy side. And then, of course, the elephant in the room that we have maybe not mentioned at all or only briefly, a carbon tax, right? Those important measures on the fiscal side, I don't see how they would necessarily clash or conflict with measures on the side of the central bank, like greening the asset purchase portfolio, or maybe a dual rate strategy for refinancing operations, things, collateral requirements. I think they're complementary. I don't see like an urgent need for coordination, but I did want to mention that this is going on in the background, right? I mean, there's the EU bodies, they talk to each other all the time. Like I was just seeing the, Commissioner for Competitive Policy, I forget her name. She was in the EU Parliament, in the Econ Committee, or what's it called, and then they were, voting on this huge, document about the ECB, and they were recommending to the ECB it does this, and there, this is dialogue going on behind the scenes. It's maybe not so public, but anyways, I just wanted to mention that people are talking to each other.
If I can jump in here. So I guess it's the most difficult question, right? Because that's exactly at the core of this debate. How do we do that? To expand this further, at the moment, I'm very liking this idea that is in the air of what is sometimes referred to as a carbon central bank or a carbon council. So again, the ideal scenario is a government that plays its role. We might not expect this for the future. So how do we compensate for this? And one option is the central bank acting without an official mandate on this, and this is something that is happening, but there's a limit as to what can be done, as we discussed. The other option is to give the central bank a mandate to do that, and there have been some steps in that direction at the Bank of England or the Central Bank of Hungary. But again, there's a number of issues there as well that we already touched upon, the possibility of loss of credibility, the clash with the primary mandate or even the secondary mandate. So are we giving the central bank too many things? Is it overburdened? Well, if we give them a climate change mandate, it's likely that they will be overburdened. So the alternative scenario is to create a new delegation, as it was done in the past, right? So we gave independent central banks the delegation to aim for price stability, abstracting from electoral cycles and political pressure. And one similar thing could be done when it comes to climate change. The idea being we need someone to set a price that is not subject to volatility in governments or other types of shocks. Let me give you two examples. They're not really pertinent because we don't have anything like a carbon council, but two things that might go in that direction. The first one is the ESRB, the European Systemic Risk Board, which is an institution, created out of emergency for the global financial crisis with a specific mandate that is not the ECB. It's close to the ECB, but it's a separate institution. In this carbon central bank also, even if it's a new institution, the European Central Bank or whatever central bank can be part of it as well, right? In the board to suggest, to advise, etc. So we could think of something like a climate systemic risk board or similar. But probably a better example is the market stability reserve, which is a mechanism that we put into the European Union emission trading scheme recently that automatically sucks out allowances when there is an excess supply of such allowances. Now, this is an indirect way of fixing the prices because it's still a market, so you're acting on quantities in the hope that this will have an effect on prices. But it's exactly going in that direction, like to kind of isolate the rule from the discretion. And there are lots of similarities here with the conversation on monetary policies and central bank independence in the past. So I like this idea of going in this direction, mainly because I'm worried of all the possible side effects, going back to one of Michael's points, all the possible side effects of alternative scenarios.
Thank you, Emanuele. Thank you, Michael. It's just we want to squeeze one more question from the chat. Here, Sebastian asks, many place a hope into a green capital markets union to finance the transition. Are those hopes justified given that the priority areas are either bank funded, for example, power generation and housing refits, or financed by the state, for example, railway or power grids? Thekla, if possible, could you please give us some insight on this?
Yeah, so I mean, also reacting on what Emanuele and Michael just said, I think where we really saw the needle moving on climate action was when the capital markets started to move a couple of years ago. So I think there was the realization that something needs to be done, and the public perception, the pressure from the own employees and the clients was there much before actually there was a tangible movement that was made. And hence, I wouldn't underestimate at all the importance of the capital markets in this whole transition. When the London Stock Exchange started changing the way they cluster the different categories of companies into sustainable versus non-sustainable, and the whole green bond movement started to evolve. This is actually when companies realize we need to move in order to actually get not only loans but especially also equity investors into this whole space. So there is a massive potential for green finance in actually supporting companies to making the investments into the right direction. One of the key aspects I mentioned that earlier is around standards and transparency on what are the right investments and what are not. A lot of companies have really done a lot in terms of TCFD, so climate reporting, and a lot of companies, but also banks, have changed their rating criteria in taking into account climate risks into their considerations. So all of that is really helping to navigate the capital into the right direction. Now, this is not directly answering the question that you had, so if you wouldn't mind repeating the question, or maybe it was. You're muted, I think.
Oh, sorry. The question is basically about how a green capital markets union can help to finance the green transition when like the priority areas are like they need funding from banks, and some of them are also financed by the state.
Yes, exactly. So what the role is, and I sort of did answer it though.
Yes, I also thought you answered the question.
Yes, I did answer it. So I think there is a really big role in it. When the announcements were made, for instance, by Credit Suisse, that there will not be further new investment into non-sustainable areas. Announcements like these, or Larry Fink also, that also made an announcement that they won't do any investments. Things like that have a kind of a domino effect on the economies. I think the really key point is on aligning on a global scale, so that all countries are going in the same direction, because we are at a very critical point in time where some of the really large industrial players in Germany, but also around Europe, are effectively considering moving out of Europe with their operational activities, because it's just becoming too expensive. And this is something that really needs to be taken into account. How do we manage the green transition while keeping the industrial strengths also within Europe, in light of the protectionism that we are seeing in some other areas of the world?
All right. Well, thank you for that answer, Thekla. Unfortunately, we have to stop our discussion here at this point, but it has been such a pleasure to speak to all three of you, and thank you for all the interesting questions from the audience. I think we could have filled a whole day with these interesting topics, Gökhan. We're very sorry about this little technical hiccup we had.
Yes, definitely we could have filled the whole day with interesting topics. I mean, just us two, we had many more questions, I think, but In the name of the entire Decarb team, we would like to thank our three speakers, Thekla, Michael, and Emanuele, for an exciting and enlightening discussion. A really big thank you to all of you for your time and your interesting insights. We also want to thank our colleagues at the Decarb Future Economy Forum for everyone who has been working very hard behind the scenes to bring this event to life.
And finally, we would also like to thank our partners for their support. Thank you to the Think Lab of the Stiftung der Deutschen Wirtschaft, and a big thank you to the Center for Sustainability at Hertie School of Governments of Berlin for providing us with the technical infrastructure. And thank you also to our academic partners, especially the DRW Berlin and the Mercator Research Institute on Global Commons and Climate Change. So the Decarb Future Economy Forum is actually a student-run initiative. So if you're interested in our topics and organizing these kind of events, we're very happy if you get in touch via email at info@decarb.world. Finally, we're excited for more events to come. One on green industrial policy and international trade planned from March 2023, and a whole new event series on the political economy of climate policy and implementation starting in March 2023. So if you would like to stay up to date with our activities, we also have a newsletter, which you can find on our website.
We also invite you to follow us on Twitter and or to visit our website at www.decarb.world, where you will also find a recording of today's event and written summaries of our past events. Finally, thank you to all our listeners for taking part and engaging. I wish you all a lovely evening and hope to see you soon. Goodbye.
Goodbye.
Thank you. Bye.
Thanks so much.